So today I want to share with you the best ICT day trade setup for consistently making profit from the forex market. If you learn and apply this model appropriately, you will most likely have a trade setup every single week. My name is Bala Francis, and don't forget to like and subscribe to this YouTube channel for more interesting videos. If you stay till the end of the video, you are going to learn my exact approach to taking a trade every single week. At least one trade every week is enough to make you a gold mine if you learn and master this strategy. There are 5 things you must look out for if you will consistently make money using this strategy. The first thing is you need to identify the market structure of the daily time frame. You need to identify where the direction of the daily trend is, whether we are in a market structure that is bullish. That means we need to see the daily time frame forming higher high and higher lows. If we are in a bearish market structure, we need to see price action forms lower lows and lower highs on the daily time frame. So once you identify the current market structure on the daily time frame, the next thing you need to do is you need to identify the draw on liquidity, the next draw on liquidity on the daily time frame. Where is the market most likely going to trade to? So if we're in a bullish market structure, we'd like to see price action trade into the next draw on liquidity. What I mean is, if we are in a bullish market structure, for example, price action is bullish, forming higher high, higher low. So if you were at the time you were studying this price action, you're around this level. So where is the next draw on liquidity? The next draw on liquidity will be the external range old high. That will be the high here and the high here. That will be the drawn liquidity. So you are taking a trade from internal range into the external range on the daily time frame, and vice versa if you are doing this on the bearish market structure. All right, so the next thing you need to identify is you need to identify the Asian section box on the 1 hour time frame that happened on Tuesday. So you need to do this on Tuesday. Why? This is because 70% of the times every Tuesday, almost every foreign currency asset will form the low of the week if we're in a bullish market structure, or price action will form the high of the week if we are in a bearish market structure. So in a week where we are bullish, we need to see on Monday price action would trade like this. Tuesday, form low of the week, take out the low of Monday, or form the low of the week on Tuesday, then start rallying between Wednesday, Thursday into Friday, the midweek reversal. Okay, this is what we call the weekly market profile, the ICT weekly market profile. Okay, the last thing, the fourth thing you need to check is you need to buy below the Asian section box. If we are buying the market, we buy below the Asian section box at a discount PDRA, and if we are selling, that means in a bearish order flow, we will be selling above the Asian session range at a premium PDRA. All right, so that being said, I'm just going to go to the chart and show you exactly what I mean using a practical example with this current market. So this is a current market structure bullish on the daily time frame of the euro dollar daily time frame. Okay, so the feed I'm using right now on the trading view is the FXCM. You can use any other feed, let's say forex.com. You can use forex.com. It's the most recommended. So on the daily time frame, you can see market structure has been bullish. We see the candles showing so much bullish momentum and impulsiveness on the daily time frame. Literally, it's telling you that this week we're in a bullish market structure on the daily time frame of the euro dollar. So we are going to do this. Remember, I mentioned we will be doing this on Tuesday. We are looking for a trade setup on Tuesday. So this is Monday, and we are looking to see price action form the low of the week on Tuesday. Then we buy from Tuesday into Wednesday, Thursday, and possibly between Thursday New York session and Friday London or New York session, we would see the midweek reversal happening. Okay, so since we know that we are in a bullish market structure, the second thing I said is identify the potential drawn liquidity. So where is the potential drawn liquidity? The potential drawn liquidity is that old high you see there, the old high there, and the old high there. All these are the drawn liquidity on the euro dollar. I see this as low resistance liquidity run because price action had consecutively formed lower highs. You see that the first, another one here, and another one here. So that is called the low resistance liquidity run. So Next thing we need to do is to go to the 1 hour and identify the Asian session range. So once you go to the 1 hour, all you need to do on your trading view is just go to the indicator section of trading view, then search for Asian range and kill zones. Once you search for these and make sure you tick the Asian section box, and it's going to appear on your chart the way it is here, you are going to see the Asian session box very visible. Okay, remember that we are looking for a trade setup on Tuesday. Only on Tuesday. If you go back to your chart and do hindsight study, you would see that almost every single week a similar trade setup happens, and is enough to make a gold mine if you master this concept and you are patient until it unfolds. So this is on Monday price action, and this is Tuesday 16th July. So this is the Asian session range on Tuesday 16th of July. An ideal Asian session range shouldn't be more than 40 pips. An ideal Asian session range is between 20 to 30 pips, but shouldn't be more than 40 pips. So if we need to measure that range, just to make sure that we are trading in an ideal Asian session range. So if you measure the range, you can see that this entire Asian session range is just under 10 pips. You see that, which makes it very ideal. It's just 10 pips. Okay, which makes it very ideal for us to look for a trade setup. Okay, so look at what happened. Price action, remember we said if we are in a bullish market structure, we need to buy when price action trades below the low of Asian session and trades into a discount PDRA. Discount PDRA. I'd like you to look at the previous price action between the last or the most recent low here that created all of this buy price action. And I'd like you to use the Fibonacci to create a trading range or outline that trading range between the low to the high there. And we need to see price action trade into a discount. Discount means that we need to see price action trade below 50% of this range. You see that? The range between the last Friday and the Monday, that range, we need to see price action mitigate it below 50%. That will be discount, and we are looking for specific PDRAs below that discount level. That is, we are looking for the fair value gaps, the order blocks residing below old lows or relative equal lows. That will be the target. That will be the PDRA we are looking to execute or take trades from. Okay, so that being said, this is the range between the low. Let's outline the range between the low here and the high right there. And let's take this out. 50% we said is 50% is this level. You see that? 50% is right at that level. So let's take out that Fibo level. So on Tuesday, we are looking to see price action trade below the Asian session box and should trade not just below it, but we are looking to see price action trade into the fair value gap or order block or breaker block that is below the old lows. You see all of these lows are liquidity levels. You see this? You can call this low resistance liquidity on all of these guys. Okay, the low here, let me outline them. You see the low here, this guy right here, this guy right here, and this guy right here. These three consecutive lows are already telling us that that is the draw liquidity, because we see a fair value gap and a bullish order block residing right below all of these lows. So this will be the target, and that's what I'm looking at. Okay, so you see that fair value gap right there, that fair value gap, price action traded below the low of that Asian session box and patiently traded into what? Into the fair value gap in a discount PDRA. Discount between the low to the high, took out liquidity. So there's liquidity taken between those three consecutive lows, and there is a discount PDRA, fair value, and the order block. So once price trades into this level, there are two ways I'm looking to execute trades. Number one, I'm looking to execute trades using the swing low price action formation or swing high. The swing low is a 3-candle price action with the middle candle having the lowest low. So once we see that swing low form, that is a strong reversal pattern. Okay, that's a strong reversal pattern. You see that swing low, 1, 2, 3 candles, the middle candle having the lowest low. Immediately price action takes out the high of the third candle. That's where I'll be executing. This is the high of the third candle. Immediately price action takes out the high of the third candle. I'm going to place a buy with my stop loss below the low of the third candle. Okay, this is a very powerful strategy. So this is what I will do. I will just do this. That's how I would have traded this guy. And where is the drawn liquidity? Remember, we already outlined it from the daily time frame, the drawn liquidity. So the first one is this previous day's high, and the one we outlined on the daily time frame. And look at how price action very easily traded into that level. And this is the only trade you need for a week. How many pips is this? This is about 1:5. And let's see how many pips this trade setup has delivered. This is about 57 pips for Euro USD. All right. If you are doing this on GBP USD, this would probably be 100 pips or thereabouts. So, but I think this is a very good setup, 1:5. If you get this trade setup every single week, patiently outlining this kind of trade setups, you are going to make money in the long run. The thing is, you have to see these things very clearly. If it's not as clear as this, then it is not the trading setup you need to be trading. If it's very confusing and it's not very clear, it means it's not the trade setup you need to be trading. Okay, guys, so this is how I will have approached this. Another way you can approach this is as price traded into the fair value gap, go down to the 5 minutes time frame, because you are framing the trade setup on the 1 hour. So you can go to the 5 minutes, look for shift of market structure bullish as price returns into the internal range PDRA. You buy from it. So you see that price action created a high failure swing, failing to take out the low, is confirming that there is bullish momentum. Shift of market structure bullish, price traded into the bullish mitigation block here. Remember, in the order of importance, the mitigation block comes first. So as price is returning into the mitigation block, you will refine it or be looking for the fair value gap that is at the mitigation, or the fair value on the 1 minute time frame. The most clearest one, that's the one you would look to execute your trades from. Okay, so you see that on the 5 minutes we saw that there was a fair value gap. On the 1 minute as well, there was a fair value gap here, but the clearest of them is the one on the 5 minutes, like I've seen right here. So this is just one very easy trading model you can use. So you can see there's a bullish order block, there's a tiny fair value gap right here, price traded into it, attached to the mitigation block. Stop loss must be below the low of that mitigation block, and you just wait for price action to deliver into the profit target. Let me know what you think about this strategy in the comment section. And just in case some of you want to join our private mentorship, myself and Solomon King, you can just check the link in the description of the video, and you're going to have access to our mentorship community. So you can get more of these premium trade setups in our private mentorship community. Myself and Solomon King are able to build mentorship program for you so you can scale up your trading as fast as possible. A complete program for Forex, synthetic indices, NASDAQ and US 30. All of this, you can find it on the link in the description of the video, the elitetradersprogram.com. Just click the link and you'd see all of the courses available there, and you have access to the mentorship community where you get some of these premium trade setups every week, and you have access to the commentary and Zoom session, and as well question and answers. Don't forget to like and subscribe to this YouTube channel. Until next time, I wish you good luck, good trading. Stay safe.